I remember buying my first few shares of Realty Income about 6 years ago, thinking to myself, wow, a monthly paying dividend stock that owns some of the best, highest quality real estate properties in the world is now going to pay me every single month without me having to do a single thing. Doesn't get much better than this, does it? But then shortly after buying my first few shares, the 2020 crash happened, and my beloved shares of ticker symbol O tanked. But without panicking, I just kept on buying more and more shares. Now fast forward multiple years, and I currently, as of right now, own around 2,000 shares throughout my multiple portfolios, and here are a few screenshots from a few of my portfolios right here. And with the amount of shares of Realty Income that I own currently, they pay me around $500 a month for, once again, not doing a single thing. Now in this video, we're going to do a deep dive into the famous monthly paying dividend stock and analyze if it's currently offering a buying opportunity or not. Then also, I'm going to share why I've been recently buying hundreds of more shares of Realty Income as the stock gets closer and closer to a new, fresh 52-week low. Now stick around because we have a lot to go through. Right after you, please drop a like in this video and subscribe for more future content like this. Now first things first, I think it's only fair if we dig a little bit deeper into Realty Income as a company for those that aren't all that familiar with the famous monthly paying dividend stock. Realty Income got its start in 1969 with a single investment in a Taco Bell. And now today, this REIT owns thousands of properties across America that are leased to hundreds of tenants operating in dozens of industries. Retail properties account for most of Realty Income's rental revenue, with industrial warehouses generating some of the additional. Now, all of Realty Income's properties are under a long-term triple net lease agreement, which means that the tenants pay for things like maintenance, utilities, and even taxes. Now, impressively, Realty Income has paid uninterrupted dividends since the firm's founding and has increased dividends each year since going public in 1994. But stay tuned because we are going to look closer into the dividends in a little bit. To look a little bit deeper into Realty Income, going on the website, they have over 13,100 commercial properties under the net lease agreements, a 99% portfolio occupancy, which means basically, for the most part, every single one of their properties are being leased right now. Over 1,300 different cities and 85 different industries. This is a high quality REIT that is heavily diversified. Now, what's also crazy about Realty Income is that a lot of us actually step foot in Realty Income's properties a lot more than we probably even realize. Realty Income leases to companies like Dollar General, Walgreens, Dollar Tree, 7-Eleven, Wynn Resorts, FedEx, LA Fitness, and many, many more, just to name a few. Now, this right here is maybe one of the most bullish aspects of Realty Income, in my opinion. It's the fact that the property diversification type is made up of mostly retail. Now, especially knowing the type of tenants that Realty Income leases to. These are tenants, these are businesses that are going to be around, whether the economy is good, whether it's bad. It doesn't get much better than leasing out your properties to recession-proof businesses. Now, of course, one of the main reasons on why most of the real estate industry is under some pain right now is, of course, because the Fed has been raising interest rates for well over a year now, with interest rates over 5% compared to the 2 or 3% that we saw just a few years back. This is, of course, putting a lot of pressure on real estate investment trusts because, once again, they do utilize a lot of debt to buy properties, and of course, the higher interest rates are, the more expensive the debt is to obtain. Now, with that all being said, and the unknown conditions ahead in the overall economy and the markets, when it comes to dividend investing, dividend investors want to know, is the dividend on whatever ETF or even stock going to be safe moving forward? And according to Simply Safe Dividends, it says that Realty Income was actually upgraded from a 70 safe to an 80 safe, which is very, very good. And this was as of March. And to give you some insight, they said Realty Income has had uninterrupted dividends for over 50 years and has achieved dividend aristocrat status with nearly 30 years of annual payout growth. The diversified retail REIT owns thousands of properties spread across the U.S. in prime locations and has achieved stellar occupancy rates that have never dipped below 96% even during the financial crisis and even during 2020. Now, most of the A- rated property owners, tenants, have a service, non-discretionary, or low price point element to their business, which makes their businesses, in my opinion, very recession-proof. Now, we're talking about companies like Walgreens, 7-Eleven, Dollar General, FedEx, and Dollar Tree. All companies that will most likely be around, whether the economy is doing good, bad, or indifferent. And that means these companies will continue to pay Realty Income's rent on a monthly basis. So now that we learned a little bit more about Realty Income's background, let's dig into it. Realty Income is down around 10.85% year to date as far as share price. It's currently trading around $56.90 per share. Now, like I said earlier, it's getting very, very close, dangerously close, to the 52-week low of $55.50. The 52-week high, believe it or not, is $73.25 per share. Yes, a lot of investors forget that Realty Income was above $70 per share not all that long ago. And looking at Realty Income historically speaking, and this is one of the most bullish long-term aspects of this stock in my opinion, Throughout all the craziness in 2008 and throughout the madness in 2020, Realty Income as a stock as far as share price has consistently trended up and towards the right, with moments of time of the stock being beat up crazy because of macroeconomic events. But looking at Realty Income on the max time frame, it's up 622% plus, and that's just the share price, not dividends included. Now, even though, as we saw here a second ago, Realty Income's share price does have the potential to really move up as we've seen historically, for a lot of long-term dividend growth investors, they're buying Realty Income at least partially because of the dividend. And if you look at Realty Income's dividends paid on the max time frame, I started buying my first few shares of Realty Income in around 2018. And during this time, Realty Income was paying just around 20 or 21 cents per share. Now, fast forward just a few years later, Realty Income is paying almost 26 cents per share every single month. And what's great about this is as Realty Income has continued to play on the offense and continue to acquire more and more high quality real estate, and then of course from there collect rent on a monthly basis, the investors of ticker symbol O have also been rewarded with bigger and bigger payouts on a monthly basis pretty much every quarter or so historically. Now, looking at Realty Income's up and coming payments, Realty Income has actually raised their dividend 2 times in the last 6 months. And with the current cadence that Realty Income has been raising their dividends, I would not be surprised personally within the next few months if Realty Income does another dividend increase. Looking at some more data, over the last 20 years, Realty Income has raised their dividend around 5% every single year, which is not bad at all for a REIT. This stock has 28 years of consecutive dividend increases and 54 years with an uninterrupted dividend streak, 54 years. So where does Realty Income go from here? Now, in the near term, in the short term, it's very likely that Realty Income could see some more trouble because of the current situation with interest rates. But longer term into the future, maybe next year or the year after that, once interest rates start dropping, I think Realty Income and the entire REIT sector is going to flip and start moving up drastically once again. So for the investors out there that are seeking dividends paid on a monthly basis, dividend raises consistently, a strong underlying company, and of course the potential for some more capital appreciation as far as share price, Realty Income is definitely a stock that you should look into. And those are the exact reasons on why I've been buying hundreds of more shares of Realty Income as it's crawled closer and closer to a new fresh 52-week low. I just so happen to think that we're going to look back, whether it's 1 year, 2 years, or 3 years, or maybe even a lot shorter. And some of us might think to ourselves, why did I not grab more shares of Realty Income when it was down well below $60 per share? But I want to hear from you guys down below when it comes to ticker symbol O, Realty Income. Are you currently buying shares of Realty Income at these levels, or are you staying away from this one from here on out? If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.